If you own American Silver Eagles, what I'm about to share could be the difference between protecting your wealth and watching it evaporate. Because right now, as I'm recording this, something unprecedented is happening in the silver market that most investors have no idea about. Let me start with a question that should keep you awake at night. What happens when the most trusted silver coin in the world becomes impossible to get at any reasonable price? Because that's exactly where we're headed, and the signs are everywhere if you know where to look. 3 days ago, I got a call from a dealer in Phoenix who's been in the precious metals business for 37 years. His voice was shaking. He told me something I've never heard before. I can't get Silver Eagles, period. The US Mint has completely shut down production, and what's left in the market is trading at premiums I've never seen in 4 decades. This isn't just about supply shortages. This is about the systematic destruction of confidence in paper assets. And Silver Eagles are becoming the last refuge for Americans who understand what's really happening to our monetary system. Here's what most people don't realize about Silver Eagles. They're not just silver coins. They're the only silver bullion coin backed by the full faith and credit of the United States government. When everything else collapses, when ETFs become worthless paper, when mining stocks crater, Silver Eagles remain the one form of silver that governments and institutions worldwide recognize as legitimate money. But here's the terrifying part. The US Mint has been rationing Silver Eagle production for months, and now they've essentially stopped altogether. Why? Because they can't get the silver blanks. The few suppliers who can produce the specific silver planchets needed for Eagles are completely sold out, with waiting lists stretching into next year. I spoke with a source inside the precious metals industry who told me something that should terrify every Silver Eagle owner. The major dealers are now hoarding their remaining inventory, waiting for prices to explode higher. They're not selling to retail customers anymore. They're keeping everything for institutional clients who are willing to pay massive premiums. Think about what this means. The most liquid, most trusted silver coin in the world is becoming illiquid. When you can't buy them, and dealers won't sell them, what do you think happens to the value of the ones you already own? But this Silver Eagle crisis is just the tip of the iceberg. What's really happening is a complete breakdown in the silver market that goes far deeper than most people understand. Let me take you inside the COMEX, the commodity exchange where silver futures are traded. Right now, there are over 400 million ounces of silver being traded on paper for every single ounce of physical silver that actually exists in COMEX warehouses. Think about that ratio. 400 to 1. It's the most leveraged market in the history of commodities. For decades, this paper manipulation has kept silver prices artificially suppressed. Banks like JP Morgan have been shorting silver futures while simultaneously accumulating massive physical positions. It's the greatest wealth transfer scheme ever devised, and it's finally breaking down. Here's what happened in March that changed everything. A group of institutional investors, led by some of the smartest money managers in the world, started demanding physical delivery on their COMEX silver contracts. Not cash settlement, physical silver. Real metal that they could hold in their hands. The COMEX panicked. They started offering massive cash premiums to convince these investors to take money instead of metal. Some contracts were settled at 30% above the spot price just to avoid delivery. But these institutions weren't interested in cash. They wanted the silver. Within 2 weeks, COMEX silver inventories dropped by 15 million ounces. That might not sound like much, but in the silver market, it's enormous. The entire annual production of the largest silver mine in the world is only about 20 million ounces. In 2 weeks, 3/4 of that disappeared from the exchange. But here's where it gets really interesting. While COMEX inventories were plummeting, something else was happening that the mainstream financial media completely ignored. Central banks around the world started buying silver for the first time in decades. The People's Bank of China, which had been accumulating gold for years, suddenly started purchasing silver in quantities that dwarfed their gold purchases. In 6 months, they bought more silver than some countries produce in an entire year. Russia followed suit, then India, then several Middle Eastern sovereign wealth funds. Why would central banks suddenly start hoarding silver? Because they understand something that most investors don't. Silver isn't just a precious metal. It's an industrial metal that's absolutely critical to the green energy transition, to electric vehicles, to solar panels, to 5G technology, to artificial intelligence, to quantum computing. Every single technology that governments are pouring trillions of dollars into requires silver. Not gold, not platinum, silver. And there's no substitute for most of these applications. Here's a number that should shock you. It takes approximately 1,000 ounces of silver to build a single wind turbine. The Biden administration wants to build 30,000 offshore wind turbines by 2030. That's 30 million ounces of silver just for offshore wind. Add in onshore wind, solar installations, electric vehicle production, and you're looking at industrial silver demand that exceeds total global production. But the supply side of the equation is even more terrifying. Silver production peaked in 2016 and has been declining ever since. The average grade of silver ore being mined today is 60% lower than it was 20 years ago. Mining companies are spending more money to extract less silver from increasingly depleted deposits. Meanwhile, recycling rates for silver are abysmal compared to gold. When you buy a gold ring, that gold can be recycled indefinitely. But when silver is used in electronics, in solar panels, in medical applications, it's consumed. Gone forever. The silver in your smartphone will never be recovered. The silver in solar panels becomes economically unrecoverable after 25 years. We're facing a supply deficit that's unprecedented in modern history, and most investors have no idea it's happening. Let me tell you about a conversation I had with a mining executive last month. His company operates 3 silver mines in Mexico, and he told me something that kept me awake for days. We're mining silver at $18 an ounce and selling it at $24, he said. But our all-in costs are actually $31 an ounce when you factor in exploration, development, and environmental compliance. We're losing money on every ounce we produce. I asked him why they don't just shut down production. His answer was chilling. Because if we shut down, we'll never be able to restart. The permitting process alone takes 5 years now, and the environmental regulations change every 6 months. We're mining at a loss because we know that once we stop, it's over. This is happening across the entire silver mining industry. Companies are producing at a loss, hoping that prices will eventually catch up to their costs. But what happens when they can't afford to lose money anymore? What happens when these mines start shutting down permanently? The answer is simple. The supply deficit becomes a supply crisis, and silver prices explode higher. But here's what makes Silver Eagles so special in this environment. When silver prices start moving, premiums on physical silver typically spike even higher. During the 2011 silver run, when silver went from $18 to $49, Silver Eagles were trading at $8 to $12 premiums over spot price. People were paying $60 for coins that contained $49 worth of silver, and they were happy to do it. Why? Because Silver Eagles are the most liquid form of silver in the world. When you need to sell, there's always a buyer. When you need to buy, they're universally recognized and accepted. Try selling a 1,000-ounce silver bar to your local coin shop. Good luck. But Silver Eagles? Every dealer in America will buy them instantly. Now imagine what happens when the supply crisis I just described really kicks in. When silver hits $50, $75, $100 an ounce, what do you think Silver Eagles will trade for? Based on historical precedent, you're looking at premiums of $15 to $25 per coin. A $100 silver price could mean $125 Silver Eagles. But here's the kicker. You have to own them before the crisis hits. Once silver starts moving, once the mainstream media starts talking about the supply shortage, once your neighbors start asking about precious metals, it's too late. The premiums will be so high that you'll be priced out of the market. I want to share something with you that most financial advisors will never tell you. If you have $100,000 or more sitting in retirement accounts, there's a way to get physical silver, including Silver Eagles, into those accounts without triggering taxes or penalties. It's called a Precious Metals IRA, and it's one of the most powerful wealth protection strategies available to American investors. I've put together a comprehensive guide that explains exactly how this works, what the requirements are, and which custodians are the most reliable. You can find it in the description below. It covers everything from the IRS regulations to the storage requirements to the tax implications. If you're serious about protecting your retirement savings from what's coming, it's worth checking out. But let's get back to why Silver Eagles specifically are so critical right now. During the 2008 financial crisis, something interesting happened in the precious metals market. Gold prices doubled, which got all the attention. But Silver Eagles did something even more remarkable. They went from being readily available at small premiums to being completely sold out at any price. I remember calling dealers in late 2008, trying to buy Silver Eagles for clients. The conversation was always the same. We're sold out. We have a waiting list. We don't know when we'll get more inventory. Meanwhile, generic silver rounds and bars were still available, but nobody wanted them. Everyone wanted Eagles. The same thing happened in 2020 during the COVID panic. Silver Eagles disappeared from the market for months. The US Mint couldn't keep up with demand. Premiums spiked to levels that made the coins almost unaffordable. But the people who owned them before the crisis hit made fortunes. Here's what I think is going to happen over the next 12 to 18 months, and why Silver Eagle owners need to pay attention. First, the industrial demand for silver is going to accelerate beyond anyone's wildest projections. The infrastructure bill, the green energy mandates, the push for electric vehicles, the expansion of 5G networks, all of this requires massive amounts of silver. We're talking about demand increases of 200 to 300% over current levels. Second, the supply response is going to be completely inadequate. Mining companies can't bring new production online fast enough to meet this demand. It takes 7 to 10 years to develop a new silver mine, and most of the easy deposits have already been mined. Third, investors are going to wake up to this supply-demand imbalance and start panic buying physical silver. When that happens, Silver Eagles will be the first thing to disappear from the market. Fourth, the paper silver market is going to collapse. When investors realize that their ETFs and futures contracts are backed by nothing but promises, they're going to demand physical delivery. The COMEX won't be able to deliver, and the entire paper manipulation scheme will unravel. When all of this happens simultaneously, and I believe it will, Silver Eagles are going to become the most sought-after asset in the precious metals market. But here's what really keeps me up at night. The people who understand this are already positioning themselves. Billionaire investors like Elon Musk have been quietly accumulating silver for Tesla's battery production. Tech companies are signing long-term supply contracts at prices that would shock you. Sovereign wealth funds are building strategic silver reserves. Meanwhile, the average American investor has no idea what's coming. They're still buying stocks and bonds, thinking that the Federal Reserve can print their way out of every crisis. They don't understand that we're facing a physical shortage of a critical industrial metal that can't be solved by printing more money. Let me tell you about a phone call I received last week that illustrates this perfectly. A client called me, panicked, because he'd just learned that his silver ETF doesn't actually own any silver. He'd been buying shares for 3 years, thinking he owned silver, only to discover that his ETF was backed by futures contracts and bank promises. "What do I do now?" he asked. I told him the same thing I'm telling you. Get out of paper silver and into physical Silver Eagles while you still can. Because once this crisis really hits, once the supply shortage becomes obvious to everyone, you won't be able to get them at any reasonable price. The signs are everywhere if you know where to look. Silver Eagle premiums have already started climbing. Dealer inventories are at historic lows. The US Mint is rationing production. Industrial users are paying above market prices to secure supply. Central banks are accumulating physical silver for the first time in decades. This isn't speculation. This isn't a prediction based on technical analysis or chart patterns. This is a fundamental supply-demand imbalance that's been building for years and is finally reaching a breaking point. Here's what I recommend for Silver Eagle owners. First, if you don't own any yet, buy them now while premiums are still reasonable. Don't wait for lower prices. Don't try to time the market. The supply shortage is real, and it's happening right now. Second, if you already own Silver Eagles, hold on to them. Don't be tempted to sell when prices start moving higher. This isn't a short-term trade. This is a long-term wealth preservation strategy that could protect you from the monetary chaos that's coming. Third, consider adding to your position on any weakness. If silver prices pull back, if premiums temporarily decline, use those opportunities to accumulate more Eagles. The fundamentals haven't changed. The supply deficit is still there. The industrial demand is still growing. Fourth, store your Silver Eagles properly. Don't keep them in a bank safety deposit box where you might not be able to access them during a crisis. Don't keep them all in one location. Diversify your storage and make sure you have some readily accessible for emergencies. Finally, educate yourself about what's really happening in the silver market. Don't rely on mainstream financial media for information about precious metals. They're either ignorant of the real situation or deliberately misleading investors. Do your own research. Talk to dealers. Understand the supply chains. Learn about industrial demand. The Silver Eagle crisis I've described isn't coming. It's here, right now. The question isn't whether it's going to happen. The question is whether you're going to position yourself to benefit from it or become a victim of it. I've been studying precious metals markets for over 2 decades, and I've never seen a setup like this. The combination of supply constraints, industrial demand growth, monetary debasement, and geopolitical instability is creating the perfect storm for silver prices. But Silver Eagles aren't just about making money. They're about preserving wealth in an environment where traditional assets are becoming increasingly risky. When stock markets crash, when bond markets collapse, when currencies lose their purchasing power, physical silver maintains its value. The wealthy understand this. That's why they're accumulating physical precious metals while everyone else is chasing paper assets. They know that in times of crisis, tangible assets outperform financial assets. They know that silver has been money for over 4,000 years, while fiat currencies have a 100% failure rate over time. If you own Silver Eagles, you're already ahead of 99% of investors. You understand that real wealth isn't measured in dollars or euros or yen. It's measured in ounces of precious metals that can't be printed, can't be devalued, and can't be confiscated by governments. But owning Silver Eagles is just the beginning. You need to understand the market forces that are driving their value higher. You need to recognize the signs of the supply crisis that's unfolding. You need to position yourself for what's coming next, because what's coming next is going to reshape the entire precious metals market. The paper manipulation that has suppressed silver prices for decades is ending. The industrial demand that's been building quietly in the background is about to explode into public consciousness. The supply constraints that mining executives have been warning about for years are finally going to matter. When all of this happens, Silver Eagles won't just be a good investment. They'll be the investment that separates those who saw it coming from those who didn't. They'll be the difference between preserving wealth and losing everything to the greatest monetary experiment in human history. The time to act is now. Not tomorrow, not next week, not when silver hits $30 or $40 or $50 an ounce. Now. While Silver Eagles are still available. While premiums are still reasonable. While most investors are still asleep. Because once they wake up, once they realize what's happening, it'll be too late. The Silver Eagles will be gone. The premiums will be astronomical, and you'll be left wishing you had acted when you had the chance. Don't let that happen. Don't be the investor who understood the opportunity, but failed to act on it. The Silver Eagle crisis is real. It's happening now, and it's going to change everything. Make sure you're on the right side of it.